We heard from stakeholders that there is diversity in practice in how entities distinguish between transactions that are exchange transactions versus contributions. For example, when an entity gets a government grant, in some instances the entity would account for that as an exchange transaction, and in other cases they'd account for it as a contribution. We also heard that there was differences in whether contributions were accounted for as conditional or unconditional contributions. And that's important because that distinction between conditional versus unconditional impacts the pattern of revenue recognition. So that's why the board decided to take on this project to improve and clarify the guidance for both not-for-profit organizations and business entities alike.
The new standard provides the criteria for determining whether a transfer of assets or the reduction, cancellation, or settlement of liabilities is considered a contribution or an exchange transaction. Specifically, an organization has to determine if the resource provider receives commensurate value in return for the transferred assets. If it does not, then it is a contribution and it follows the guidance under Topic 958. If it does receive commensurate value, then it's considered an exchange transaction and other guidance should be applied. For example, guidance under Topic 606, which is revenue recognition.
So the final guidance provides a more robust framework for determining whether a contribution is conditional or unconditional, and also for distinguishing between a condition and a restriction. When determining if something is conditional or not, you would look to see if the agreement contains a barrier that must be overcome and either a right of return of assets or a right of release from obligation to transfer assets. When determining something is unconditional, then the next step would be to determine whether or not the contribution contains a restriction. And to do that, you would look to the definition of a donor-imposed restriction. For more information about the final guidance, you can go to the FASB website, and we will also be having a webcast available in September of 2018 that highlights more detail about the final guidance.